Hey everyone, my name's Andy. This is my channel, Finding Value. I'm going to go over real estate prices and how important real estate prices are. They set the conditions that we invest under. This is the driver here, one of it. Well, this is the big driver. I would say real estate is the driver of it, of a lot of things. So I'm going to get into here and I'm going to give you my opinion and show you some data. And then I'll talk about, some other people and what their opinions are and why I don't know, or why I don't think they are valid. So it's real estate prices. I'm going to bust in here. Real estate and interest rates. So real estate, I think, is going higher. Inflation ramps up from fractional reserve banking system. So money goes into the commercial banks and then through fractional reserve lending gets lended into existence and the money supply expands. That's 10x. They can go up to, they can expand the money supply 10 times. Government spending is a 1-to-1. So you have a 10x area and a 1-to-1. So they can spend on a 1-to-1 basis, but if real estate's going down, you're dropping a 10x versus a 1x. But real estate's going higher, and that's why I think we're going to have inflation. Interest rates chase inflation to slow money velocity. Interest rates do not push home prices higher. That is a false claim. I'm going to show you in the later slides through some correlation here. The driver of real estate going higher is supply-demand imbalances. We have a deficit of 4 million new homes. That's going to drive real estate prices higher. Interest rates are going higher, and you need to lock in mortgage rates now, and that's what I've done on mine. So let's see what I have. This is interest rates, long-term interest rates. Down, up, down, up, down, up, down. That's that cycle, right? Well, I'm going to look at housing starts. Housing starts, their driver is price. When price goes up, they build new homes. Price goes down, they build less homes. This is a huge boom here. From about 70, maybe 71, 70, all the way up to maybe 72, 73. Interest rates, 70, all the way up to 71, 72. We get a decline. We get a decline. 74, 73, 74, all the way up to, I would say, 77 maybe for that. 74, all the way up to about 77. Interest rates, when they overshot. And then we came down. Here's 80. Interest rates came down. Stocks bottomed. They were bottoming in 1980. They went higher. 1980. This is 82 to maybe 83, 82, 83, 84, somewhere in there. 82 came back up. 82 to 83. See that? Came down, boom, higher. Then it came back down after 83 or so. 83, we were coming back down. So down here, looks like 91 was a bottom in housing starts, property prices. So interest rates went down. Look at that, right here. Boom, down. See the correlations. Do you see the correlations? Now, we went higher here, right? 90 to 2008. So 90 to 2008. In this area, you can see 2000, we went higher here. And this right here was a mortgage debacle. Drove prices higher. Now, 08 came down. They lowered interest rates. What did stocks do when they lowered interest rates? They went higher. Stocks like low interest rates. That's what drives them higher. Here, we're right here, right here, right here. We've got a demand supply shortfall. We're probably going to go higher. We're going to go up, and we have to build these homes. Going to go up here. If we have to, meet that deficit, we got to build them. So if we're going up here for housing starts, what do you think that's going to do? If every time we go up here, interest rates rise, house prices rise because we need more homes built, house prices are going higher. Now here's something. Here's the Schiller Index. I just drew these lines in here. I said, I wasn't even looking at the date. It's kind of funny. I said, it's going to go higher. It's got to go higher. We got to get up to the top of this rail. Here we are at the top of the rail. Now, if we have a pattern that looks like this, it's going to break out the top side of the rail. Broadening wedge pattern. We're at the top of the rail. If we break out of this, broadening wedge pattern. We have a higher break. Prices are going to go far higher if it breaks out of that top. We have a 4 million supply demand shortfall in homes. All the metrics are screaming higher. They're all screaming higher. This person, they said, well, I'm going to use price and price only. You can't do that. Price is not a driver of home prices. It's just a symptom of something else. It's supply demand imbalances. So, real estate, I think it's going higher. Now, if real estate is going higher, and if real estate is correlated to interest rates, how about we look to see if interest rates are going higher? Interest rates fell from COVID, and I'm going to show you that fall. I'm going to show you this. Look at that. COVID, the market was predicting something bad was going to happen, and it did. Boom, down. Then you get this huge buy back up, and then the slow leak out of days. This is a bottoming process right here, guys. It's all a bottoming process. Home prices are going higher. Interest rates are going to go higher. This looks like a nice coming up pattern that interest rates are going to go higher. Now, if interest rates are going to go higher, if they're going to go higher, we should be seeing the Dow and S&P 500 wanting to go lower. And what do we see? Interest rates dropped during this period. It propped the stock market higher. And we should be seeing big volumes selling. We see big volumes, big down days, small up days. Big down days, small up days. Big bullish, bearish engulfing. We're seeing a topping pattern here. Interest rates going higher is going to put pressure, and stocks will go down. Notice how this thing's contracting at the top. It's going to go down. Well, look at the S&P 500, SPX. Now remember, look at the momentum changes. Back here, do you see a lot of big down days? There's a couple, but not really. It kind of just comes higher in this pattern. Then you have this big step change. They lowered interest rates all the way to zero. This popped back up because of it. Our home prices our home starts went down too during COVID because they stopped it. Now look, big moves down, little moves up higher, big move down, little moves up higher, big move, big move, big move. See the momentum changes everywhere? Big move, bearish engulfing. It's coming everywhere with the little up days inside of it. This is gonna go down. Now's the time to rotate out of stocks and get into commodities, real estate, precious metals. I'm showing you here, real time, that this is a topping pattern. It's going to go down. And what about the market leaders? What about Apple? AAPL. See the step change right here? Step change right there. Volumes kicking in here. Volumes up. People are selling this. Big down days higher. Somewhat of a big up day comes up. Boom, big down days, big down day. It's coming. It's going to go down. And we're seeing it in the market leaders. Look at MasterCard. The thing looks horrible. It's just horrible. You've got all these big down days sprinkled all throughout with the smaller up days. Big down day, big down days. bearish engulfing. It's probably going to head lower. Looks like this is getting tired. Looks like the sellers are just getting out of this thing. It's done. And if interest rates go higher, these stocks are going to go lower. That's my opinion. So we've got a confluence of data. We've got interest rates that look like they're going to go higher. Now, I think that too many people are just using price. They're not, don't listen to these people. You have to look at the data. You have to look at your metrics. You have to see what they're telling you. And the metrics, inventory is at record lows for housing. Days in the market, low. It's super short that they're out there. Interest rates are low. If interest rates chase the price of real estate, interest rates will go higher. Foreclosures, there is none. If all these people who have homes that don't have jobs, they all say unemployment, unemployment, unemployment. Where are the homes? Where are the homes? And if they have equity in the house, why don't they just sell the house? They're not going to foreclose on it. They're going to say, here's a bank. I'm going to give you 40% of my equity in the house, or 30%, because we've had house prices going up. They'd sell it. And also notice that unemployment is not a metric. It's not a metric. It does not drive house prices. Supply and demand does. And unemployment may or may not affect the demand. It's not 100% given. So my thesis, my stance is real estate's going higher, commodities are going higher, and precious metals are going higher. Get rid of cash, use physical precious metals, and we can see that in all of the ratio charts. Now I'm going to pull up a price chart of platinum. Here's platinum. Two big flag patterns. Looks massively bullish. Massively bullish. You look at the supply-demand deficits going forward for platinum. Bullish. It's all bullish. Now, when did platinum do great, right? It did great from 71 all the way up to mid-70s. You can see the recession line here, right? Recession line, boom, went back down. I'm going to go back and correlate something here. Housing starts. Here's that recession there. See that? We had up top and it went down. The housing starts went down. That was deflationary. Platinum does not like that. It went down. This chart right here correlates perfect to housing starts. Right here, when housing starts go up, platinum will go up. So let's look at the massive move. 2000. I'm willing to bet that right in here, housing starts were going up during this time frame all the way to 2008. From here to here. Just before 98, 99 to 2000, right? We go back to housing starts. There we go. 98, 99 all the way to 08. Housing starts were increasing. It was inflation. So if we have, here's silver, huge cup and handle pattern, and now we're at 25. It's up here. This guy's saying it could possibly go up here. All of this data, all of these charts, all of it is correlating to higher prices. It's correlating. This is telling us that there's a supply shortage in the charts. People in platinum, people in silver, all the commodities, they're all telling us that there's a shortage, that prices are going to go higher. It all aligns. They're all correlated. They're all interconnected. We're all nodes in this gigantic interconnected world. And if you start the nodes that, you make decisions, and that's how you influence society. All these decisions influence society. If all the nodes decide to buy something, society goes and makes that something. We're all interconnected. All these charts, they're interconnected. The driver is real estate and interest rates, because interest rates chase real estate. This is Finding Value. Hopefully you got a lot of value out of this clip. If you like this stuff, please subscribe and uprate the video. Thanks.